Okay, well, I guess Mayor Gordon is not going to be able to be here again today, and so she had asked if I would chair the meeting again. So since we do have a quorum, I guess we could go ahead and get started, and if someone wants to, the appropriate thing would be to make a motion to ask me to chair.
Move that Councilmember Lamb chair today's meeting.
Second?
All right, there's a motion and a second, and is there any discussion on that motion? All in favor, please say aye.
Aye.
Any opposed? Thank you. All right, so the first item on the agenda is the minutes of the October 29th meeting. Is there any questions, concerns, changes, or any other issues with the minutes? If not, then it would be appropriate to have a motion to approve the minutes.
Move to approve minutes.
All right, there's a motion. Is there a second? Second. All right, Charlene, Ms. Summers seconded the motion. All in favor? Is there any discussion on the motion? All in favor of the motion, please say aye.
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 Any opposed? Thank you. Next in your packet is the quarterly report for the expenses. Are there any questions, concerns, comments? If not, then that is for information only. There's not a motion necessary for that. The next item is the ratification of transfer of estimated payroll, and that is your memo that $297,000 is the amount of payroll from January 2020 to March of 2020. Is there any discussion? And it is appropriate that there is a motion to approve this.
Make a motion to accept the letter and to transfer the funds as indicated in the letter dated January 28th.
All right. Mr. Maxwell made a motion. Is there a second?
Second.
All right. Councilmember Brown seconded the motion. Is there any discussion on the motion? There being none, here comes Gay. All right. There being none, all in favor, please say aye.
Aye.
Aye. Any opposed? Thank you. Good morning, Gay.
Good morning.
Happy New Year.
Thank you. Happy New Year to you.
Yes, I know. Yes. Well, we're rolling right around, but that's rolling on down into the agenda, but you're just here just in time
Yeah.
for the investment review, okay?
Oh, okay.
All right. Now we would welcome the team here and introduce.
Of course,
and,
yes.
Yes.
For this particular meeting, I invite one of our maximum specialists, Floyd Simpson. He sits in our Philadelphia office and is closely tied to the return-seeking portfolio strategy. So in terms of the discussions of the various investment managers, he's even more closely keen on all those topics and subjects than I am, and can provide additional color about our overall strategy. So I'm going to have him take over about in the middle of the presentation to discuss some of the particulars, just to give you a different sense of what's going on related to the return-seeking portfolio and what we're deploying. So in terms of on page 1 in the book, during the fourth quarter between October and December, it was a very good quarter. The return-seeking portfolio generated a total return of 5.52%. This was ahead of the benchmark by 8 basis points. And that portion of the portfolio actually increased in market value by $1.1 million. The liability defeasing portfolio, which is made up of all fixed income securities, has a slight decline in market value because on the longer end of the yield curve, rates actually increased during the fourth quarter. But over the last couple of days, rates have dropped quite considerably in terms of certain parts of the curve between 2 and 10 years has gone down about 10 to 15 basis points, partly because of just recent economic news related to China. The virus, which you would think it's like, okay, maybe it's just a flu, has already restricted travel. Earlier today, they put down edicts that you're not going to be allowed to travel between certain Chinese provinces, and all that is a sign that maybe demand for oil has decreased, as well as expenditures on certain types of discretionary consumer goods. During the fourth quarter, the PFM's investment committee made another small tactical change within the return-seeking portfolio. We actually increased the allocation to the equity component. So long-term, our overall strategy is to have a 60-40 split between equities and fixed income. That has been ticked up slightly higher, and right now it's about 64.8%, if you look on the next page. So within the overall pension fund, the return-seeking portfolio is about $21.5 million. The liability defeasing portfolio, which covers all of the anticipated pension benefits through the life of the pension fund, amounts to about $10.8 million. And within the return-seeking portfolio, there's a 34% allocation to fixed income, 42.6% to domestic U.S. equities, and then 23.1% in international equities. For 2019, it was also a very good year. The return-seeking portfolio generated a total return of 20.27%. We were once again ahead of the benchmark as well by 16 basis points, and the change in market value was $3.6 million. The liability defeasing portfolio increased in market value by $874,000 and had a 12-month total return of 8.33%. So overall, the combined portfolio increased by 14.8%. I think pretty impressive results for a very strong year in the equity indexes and the fixed income markets. So where do we go from here? The Federal Reserve is actually meeting yesterday and today and tomorrow. In 2019, the Federal Reserve lowered the federal funds target rate by 3 times, by 75 basis points. So if you're looking at savings accounts, all those yields have gone down. Personal CD rates have gone down, but hopefully the economy is on a path that we're going to have sufficient enough growth that the Federal Reserve doesn't feel like it needs to add more stimulus. So right now, as of more like 2 days ago, the markets were thinking that the Federal Reserve is going to remain on hold for the foreseeable future, at least for the next 6 months. That there might be a chance that they would lower rates again in the second half of 2020, but they're going to remain on hold for the better part of the first half here. This is also reinforced by the individual Fed governors who is able to put a particular dot on the Federal Reserve dot plot. And you can see that there isn't anyone that is projecting a decrease for 2020. In fact, 4 of the dots is above where rates are currently at for short-term rates. So what the Federal Reserve is telegraphing is that there might be a bias for higher rates in 2020. The fixed income markets are dismissing this, and Fed funds futures is suggesting that there would be another decrease. So the Federal Reserve is saying one thing in its public statements, but the markets is completely dismissing that and saying, no, it's like, if anything, we're probably going to see you being biased towards lowering rates, especially given the state of global affairs. In 2019, it was a very pronounced market for the fixed income world. You can see on the chart on the bottom on the bottom half, rates have decreased anywhere between 62 to 103 basis points all throughout the yield curve. So those are remarkable moves in the fixed income world. Last year, at the end of 2018, we were thinking that the Federal Reserve would continue raising rates, and they abruptly changed course in December into January and started telegraphing that they're going to lower rates. Roy?
So this will take us into the stock market returns. Stock market hit record highs during 2019. You'll notice from the graph is that it was a really great year. Equity is basically up close to almost 30%. And when you think about that aspect, the one thing to point out is that this year we started off like the Fast and Furious. We were up about 3%. And then because of the Wuhan virus and a lot of those concerns, you've seen a lot of red within the market over the past couple of days. So we're now up about 0.5% as of the open of today. So that's where the market is right now. When you go into the next page, you'll notice that this solid economic data is the reason why the Fed is saying as a whole either keep rates steady or maybe increase them. The reason being, U.S. GDP growth has been pretty good. Consumer confidence is, at all-time highs. And if you think about it, it's because of job growth, there's not a lot of unemployment. But then, if you look at the bottom left side, you'll notice new home sales. They're at a nice high point. And on top, if you think about it, going back to the global financial crisis in 2008 and 2009, we're not at those highs. It's been a very level growth and a very steady and good growth. The last graph just talks about the monthly job growth, which has been also good. This brings us into the next page. Recession risk indicators. Now, if you're thinking about it, for a market that has been a growth market for so long, you would expect to see a lot of risk indicators actually say we're going into a contraction, but we haven't. And that is one of the things that if you're looking at it, and that's why the Fed is essentially saying we don't want to raise rates because, we don't want to lower rates. We might end up raising rates because things right now look pretty good. So if you're looking at it from a consumer's aspect, the consumer has really pushed the market. They are the engine of the market. Inflation hasn't really been there. Financially, in some respects, yes, credit spreads look good, but as a whole, people are in a better place too. So you have a lot of that going on. On the next page, we're going to talk about factors to consider. And on this page, I would say, there's two ways to kind of think about it, on the left side and on the right side. And on the left side, those are things like the Fed, what the Fed is thinking, the fact that we have low interest rates, they bode well for the economy. The one negative is that the trade tensions. I think if we're going back, it's been a while since we've really had global economic tensions like this. And that's nothing that's going to die down overnight. Probably not for years. It's probably going to be, in some respects, what we should expect going forward, because of the fact that China does want to have independence of themselves from the market, and so that right there will probably consistently be here for the long time. On the right side, economic growth globally has been pretty good. If you're looking at it, the lower interest rates have helped out a lot of economies. And if we think about it, what David said, during the fourth quarter, where for the Macom team, we actually added some more money to international equities and to domestic equities. The reason being is that we see a lot of growth within international equities because they were beaten down for so long that their valuations look good. And on top of it, those companies have an opportunity to outperform going forward. This leads us into your return-seeking portfolio. And on page 1.1, this gives you a view of the indexes. The key thing to see here is over the 10 years, it's been about the U.S. 13.56% for the S&P 5 has been phenomenal. But if you compare that to international markets over that 10 years, the EAFE, 5.5%. So international markets haven't caught steam like that. But if you start to notice on the quarter-to-date time frame, the international markets are starting to catch up. And the reason being, a lot of those companies that, they've suffered because of a lot of the dynamics that are going on, they're starting to do a lot better. This will lead us right into the next couple pages, which are about the economy, quarterly market summary. These is actually a lot of things that we've touched upon already. So I'm just going to jump right into how does this play a part within your return-seeking portfolio. And that will bring us to page 2.1. So here, this goes into, have we outperformed our benchmark? And then secondly, have our decisions made an impact? So I'm going to cover those two things. The first thing you'll notice is that for the fourth quarter, we outperformed. Also for the 1 year time period, we've also outperformed 20.27 versus a blended benchmark of 20.11. And honestly, 20% rate of return for a year is, especially for a portfolio that has fixed income too, it's a really good return. Really good. Since inception, you're looking at a return of 7.46 versus 7.19. So we're outperforming our benchmark and doing what we need to do. Now, how does that relay into your portfolio and your dollar amounts? So I'm going to take us to page.
Well, you want to just spend a couple of minutes on, it looks like we've added several new managers
We have.
in the international equity component.
So within the international equity component, we added a couple managers. We added WCM. We also added Acadian, and we added Schroders. So those are the three managers that we added. And the reason being, whenever we have managers, we kind of pair managers. So we say if somebody's going to be somewhat aggressive, we want to pair them with somebody that's a lot less aggressive. So that's what we did with these two managers. These two managers allow us to be able to pair managers, so we can take one person that's a little more aggressive, pair them with somebody that's a little less aggressive. And then within our emerging markets component, every time that we're trying to go into a market, we think about two things. Do we like the market, and is there an active manager that we want to allocate to? If we like the market, we're going to always be passive because we think that's the best way to get exposure. Best way is the cheapest way. But if we feel that the market has great potential, it's misunderstood by a majority of investors at that point in time, and we can find a good active manager that fits our criteria, we're going to go in active. So that hence is why we added Schroders to your portfolio.
Did they replace anybody or just an addition?
They are addition.
Okay.
They are addition. And the reason being is that within emerging markets, you have a lot of companies, but the information is very sparse. And so that allows an opportunity for individuals to be able to outperform. So within there, we want to make sure that we have somebody that understands those markets so that they have an opportunity to outperform. And that's why we added Schroders. Getting to our bottom line, page 2.5. How does this play a part within your portfolio? And when you're looking at the 1 year number, remember, it's a return of about 20.27. That return on investment number, that 3.6 million, is what you earned for the year. And that's, sometimes, right, saying I earned 20%, what does that mean? That's what it means right there to your portfolio.
Pretty nice.
You just take it right now.
Look,
Where else do you get to manage this type of money?
Right.
So, look,
Yeah, how do you put this on my resume?
last year was a phenomenal year. It was aided by, if you think about it, 3 Fed cuts, which, incentivize people to take risk. Equity markets continue to do well, but the caveat, fourth quarter of 2018, equity markets were down 20%. So essentially what you saw this year was the comeback in a sense. So you saw people saying, okay, hey, markets are down, it's time to invest. The Fed said, hey, you know what? Markets are down. We also are thinking about other aspects of inflation and unemployment. This can play a part in there. We need to go ahead and cut rates. That incentivized the markets. Companies did better and great returns.
So I was here late and I apologize. So you may have already covered this
Yes.
in your conversation. I just couldn't get off the phone. So last year was a phenomenal year. In the last couple of days, you've seen a lot of changes in the market. And you talked a little bit of China before I got here.
Yes.
But did you say what you're going to do moving forward in the next quarter to keep some of those things in mind, or have you repositioned some of these things?
So we're still overweight to international equities and domestic equities as opposed to fixed income. If we're thinking about the Wuhan virus, that is it's a small disruption within the market as of right now. Now, if it spreads even more, and I think about it with China, the fact that, right now, I want to say you have the Chinese New Year coming into effect. So, they're already shut down. So they just said, okay, you know what, let's shut it down for a couple more days. You're seeing small impacts to where, for travel per se, like, Hong Kong isn't allowing a certain amount of Chinese individuals to come into Hong Kong, so they are starting to limit travel. Now, China's more concerned of, if you limit travel, will you limit the goods that I trade with you? That has not happened yet.
That's more what I was more thinking about, the next month's impact on the market.
Right. And so right now you've definitely seen a pullback within the market because there is a lot of uncertainty tangled into that. As we start hearing more, and I would say more on, you have Chinese consumers traveling, but more on the trade front, because the trade front just became clear. If it becomes, and now it's becoming a little bit more muddled, that's where we don't want to make a move saying, okay, hey, we made a knee-jerk reaction, and all of a sudden, oh, well, there's no impact to their trade. But I want to say China has done some trades agriculturally with, if I'm correct, Australia and another emerging market country. So they're still able to trade, and we haven't heard any other countries basically saying we don't want your goods based off of what's going on in that province. That also isn't their main province, and I think that's the one thing to consider. Like, it isn't one of their main provinces. It's a nice sized province, but it's still, I want to say, it's number 5 on their province list. So it's not one of the ones that has the big economic impact to the country yet.
So you still look at this as a blip, and almost a correction in the market in general, given last year's run?
Yeah, it's not even a correction. In terms of just last week, we were setting new highs. And even with the 3 days of negative returns over the last week, we're still up higher year to date.
Yeah.
And I think the market is up today as a rebound. So in terms of, I think one of the things that has sort of shocked us is a lack of volatility in the market. You're not seeing alerts where, the stock market's down 1%. It just seems like it's always on an upward trajectory, that there are no decline days. So one of the things I have set up on my personal account is whenever the stock market goes down, I don't think I've seen a decline of greater than 1.5% for months.
In a bull market.
Right.
Yeah. So it's just been basically an upward trajectory, but there's going to be risk in the stock market. And these temporary 1 day, 2 day, even week or couple weeks, they're normal parts of the entire equity market. And as you can see, 2019 was a great year. Despite that 2018, I think the markets were down slightly. But in terms of, it came roaring back very, very quickly. And if you were just out of the market for just a couple weeks between the end of December to the beginning of January of 2018 into 2019, you gave up huge amounts of return. So. Other things to have on, I think that's more or less the liability defeasing portfolio. We're continuing to match disbursements. I know it's like, that probably would be a good segue in terms of the passage of the benefits, so.
Right, there's a copy of the ordinance that put in place the increase of the 4% to each retiree's annuity, and I know Gay and Charlene, you all got a letter in the mail, and have you all heard anything from any of your fellow retirees? Okay, all right, okay. I just thought I didn't realize you all had already gotten a copy of this, but I thought you all would want a copy of this for your records. So,
And the first payment has already gone out, right?
I believe
Yes,
so.
it was paid on January 1st,
Okay.
so they received it January 15th.
And it went through council without any problems, which we were very pleased about. So, very pleased. Thank you, thanks. Mr. Simpson, Mr. Calver, we always appreciate this very valuable information, and I just sit in amazement and look at these numbers and know how well this plan has been managed over these years. and continue to be very appreciative of your all's involvement with this, very much so. So, are there any questions of Mr. Simpson, Mr. Calvert? Any further questions? No? All right. This probably is one of the shortest meetings that we've ever always, this meeting is always very, very short and brief, but that's because everything's to the point and good information. So, on our agenda, there is the next item is to reschedule the April 28th meeting.
That's your budget address,
Oh.
because you all moved
Okay.
your calendar, so
Yeah.
that
Okay.
meeting needs to be moved.
So, I guess my question is, if we change it, does it mean that it becomes a special meeting? Or
I
can?
believe so, because I think you all are set as a set last Tuesday of each
Okay.
quarter, or every 3 months.
All right,
So it will be a special meeting, so whatever's on that agenda will be.
okay.
Say it
Can we
again.
move it to 9 and not have to have that?
No. 9 o'clock.
Told you all this
I
was
was gonna
early
say,
for him.
apparently this is too much.
I guess, I mean.
My bad.
You know better than that.
You're all scheduled, I mean.
We're flexible, yeah.
Okay.
I just went, like, it was already on my calendar, so I just wanted to make sure
Sure.
I remove it from my calendar.
Is there any benefit to moving it backwards to the 21st or forward to the 5th?
We might have some challenges getting all the materials by the 21st.
Okay, well,
So,
move it
yeah.
forward.
Yeah.
Forward, be all right.
The Economic Investment Board meets at 10 o'clock on Tuesday the 5th.
Oh, okay, alrighty,
I also
okay.
saw that board.
Oh.
Wait a minute, what
At what time?
we in?
That's at 10
Well,
o'clock.
What,
be
how long's your
May.
meeting? How
Do
long?
what,
Well,
do
it
what?
depends on if we have job plans or not.
The-
Sometimes an hour.
The reason I ask that is, why are we meeting at 10 o'clock instead of 11 o'clock? All other boards usually, because we meet on Tuesdays, and we go into 1 o'clock and 3 o'clock.
Right.
But 11, some of my other meetings are 11 o'clock. Why do we meet at 10?
I am going to take a stab at this and say that these gentlemen, they come and do this meeting and then they go forth and meet with the staff and
Oh, okay.
other people. You always go from here and go over and talk with Chad and,
Oh, we do, but that was just because.
oh, okay. Okay.
I was just wondering,
It's been 10 o'clock ever since we started.
I
and
know
like
it, but
you tell us-
I don't know why.
Well, it's
The mayor likes
historically-
10 o'clock.
Yeah.
I
When we
think it was
started,
Jim's call.
Huh?
I think it was Jim had it at 10.
Jim, right, I
It's
think it
been
was the mayor's.
10 o'clock for as long as I can, I mean.
All right,
Oh,
just,
Red, come on,
26
wake up.
years.
well, I was just talking about the
You
continuity
just
of the
can't,
day.
yeah.
The continuity of the day. We've got, we usually meet at 11 on other meetings, and then we go into we got lunch, and then we go to 1 o'clock meeting, 3 o'clock
We
meeting.
just means we have an
Now
extra
I've got
hour in
extra
between.
hour, and I don't know what to do with it, so.
Well, I'm sure that your constituents can help you figure that out.
Find something.
I'm glad to not have them back to back to back personally.
All right.
Yeah.
Okay, now back to figuring out what the next meeting is since we, all right, so if we can't have it on the 5th, the next would be the 12th of May.
That's gonna be the chamber
We're gonna
trip.
be in the chamber trip.
Yeah.
We can do it on the 10th, you may just need to do it
Oh,
on
or
the
the
5th. On the 5th, I'm just saying,
That's what I'm saying,
this
another
room
time
is
may work.
typically the job plan board at 10. So if we
Okay,
did it at 11, that should be plenty of time.
okay, all right,
If you wanted until the 5th, we just couldn't do it at 10, was all I was trying to think.
all right. So are you guys, Charlene and Gay, can you do it on the 5th at 11?
As far as I know,
Okay.
I don't have my calendar with me.
Oh, no.
But I
Now,
don't think
will
I
that
have
affect-
anything.
I'm sorry.
That's-
Will that affect the next, I mean, there's no.
No, this would just be a special called meeting because of the mayor's budget address.
Okay.
So, so it wouldn't affect the next quarterly meeting, so. All right, so if everybody's okay with on April, that's May 5th at 11 a.m., then it would be proper to have a motion.
So moved.
Now, are you bringing tacos? Cause it's Cinco de Mayo.
I don't Cinco.
No, you don't.
Since we're moving it for lunchtime, come on now.
See, I already.
It'd be a short meeting anyway.
All right, May 5th at 11 o'clock. Okay, there's a motion on the floor. Is there a second?
Second.
All right, second by Gay Lang. Is there any discussion on that motion? There being none, all in favor, please say aye.
Aye.
All right, any opposed? All right, so there'll be a special called meeting of the City Employee Pension Fund Board on May 5th at 11 a.m. And we might have to see if I don't know, Amanda, how long does the jobs fund, do they usually meet an hour?
Yeah,
Okay,
it just
All right.
depends on what's going on that day, but I can ask Wes. In
okay,
worst case, we could move our meeting up to 9:30 if we needed to, if he feels it's a big day. But
okay,
I'll ask him later.
okay. Well, and then we can move this meeting to a different location if we had to, I mean, okay. All right, so we'll coordinate that with the council clerk's office, because there'll need to be the proper notice and everything for the special meeting.
Yep.
And that means that when it's a special meeting, that only the items on the agenda can be discussed, just for everybody's knowledge, so, going forward, so, all right. Is there any further discussion on anything else, any other matters? If not, we
Move to
appreciate.
adjourn.
Adjourn, okay, there's motions, is there a second?
Second.
Second by Gay, all right, and all in favor, please say aye.
Aye.
Any opposed? We are officially adjourned.